In this video, I will teach you 3 trading strategies that are very accurate and profitable. In each trading strategy, there will be some special settings and adjustments for the indicators, and I will explain many tips and tricks that are necessary to follow if you want to make profit out of these trading strategies. So make sure you watch this video until the end, and let's get started. Before we start, if you like my contents, please support the channel by liking the video and subscribing to my channel if you haven't subscribed yet. Alright, let's begin with the first trading strategy and see how it can help you to find accurate buy-sell signals in the market. In this trading strategy, we have 5 exponential moving averages and RSI. On the free version of TradingView, you can only add 2 indicators to your chart, but we can add a moving average ribbon and then adjust it based on our trading strategy. For this purpose, here we click on indicators and we search EMA ribbon. We add this one, which is written by FS Crypt. Alright, now we should define 5 different exponential moving averages with some special settings that are going to help us to find the best trading opportunities in the market. So we go to the settings of the ribbon, and first here in the style tab, we remove moving average 6, 7, and 8. Because we only need 5 exponential moving averages in our trading strategy. Then we go to the inputs tab, and for the first moving average, we set the length at 3. For the second moving average, we set the length at 5. For the moving average number 3, we set it at 13. And for the moving average number 4, we set it at 21. And for moving average number 5, we set it at 80. And then we go to the style tab, and for the first moving average, we set it at red. And for the second moving average, we set the color at blue, dark blue. And for the third moving average, orange is okay. For the fourth moving average, we set it at green. And for the fifth moving average, we set the color at light blue. Alright, we're done with the settings of the exponential moving averages. And now we need to add another indicator, which is RSI. This one, Relative Strength Index. And we're going to use it with the default settings. So we don't change the settings of RSI. Alright, everything is already set on the chart. And let's see how we trade based on this trading strategy. It's very easy, and you just need to pay attention to the points that I'm going to explain. Alright, let's see what we have here. So this red line here is an EMA with length of 3. The blue line here is an EMA with length of 5. The orange line is an EMA with length of 13. The green line is an EMA with length of 21. And this blue line here is an EMA with length of 80. For this EMA with length of 80, we will use it for identifying the major trend of the market relative to the time frame of your chart. So when the price is above this blue line, I mean this blue line here, which is an EMA with length of 80, when the price is above this line, we can say that the market is trending up, or in other words, the price is in a bull market. And on the other hand, when the price is below this EMA, which I will show the example later, it will tell us that the market is trending down. In other words, the price is in a bear market. Then we use these 2 moving averages, the orange and green line, that are exponential moving averages with length of 21 and 13 for identifying minor trends within the major trend. When the orange line is above the green line, like here in this part as you can see, it tells us that we have a minor bullish trend. And in times that the orange line is below the green line, like here in this part, it tells us that we have a minor bearish trend. When the price is above EMA 80, and so the major trend is bullish, and at the same time the minor trend is also bullish, this is our point of interest because it shows that the price is advancing strongly. But in this situation where the price is above EMA 80, but the minor trend is bearish, this situation shows that the upside momentum is weakening. This could be because of a pullback within the trend, or more seriously, it could be a sign that the uptrend is ending and the price may go to a trading range, or a reversal may happen, exactly like this case here. So we are interested in times that we have a bullish major trend, which is when the price is above EMA 80, and at the same time we have also a bullish minor trend, which is when the orange line is above the green line. And then we have these red and blue moving averages here, which are EMA with length of 3 and 5, and we're going to use them as a trigger for trend entries alongside with RSI for more confirmation. Alright, now let's see how we can get buy-sell signals from this trading strategy. We want to take a conservative approach. We want to decrease our risk as much as possible and only take the signals that can offer higher probability. And for this purpose, the first condition is that the price should be above EMA 80, and there should be also at least 2 higher highs and higher lows on the chart. By having this condition of at least 2 higher highs and higher lows, we can be sure that we are in an established trend. So we will have higher probability when we take signals in the pullbacks within the trend. Based on price action concepts, when the price makes higher highs and higher lows, that means that the price is in an uptrend. This is the structure of an uptrend. By the way, if you're interested to learn price action trading, recently I published a book, The Art of Price Action Trading, which is a comprehensive guide to price action analysis. The link is in the description and you can get it later if you want to take your trading to the next level. Alright, getting back to our trading strategy. So here we have our first condition, which is the price is already above EMA 80, and before that the price made higher high and higher low. Alright, now in the second step we should wait for a pullback. We want the price to go below the green line, and this is the signal for a pullback. In this case, at this point you can see that the price crossed below the green line when this candle formed on the chart. When we have a pullback like this, here for these short moving averages, usually the red line goes below the blue line, and we wait for the red line to cross back above the blue line. When the red line is closed above the blue line, which happened here, this is the signal that probably the pullback ended and the price is gonna advance more. So here, when this candle is closed, we have the red line closed above the blue line, and the candle itself is also a bullish candle, as you can see, because you can see that the price went down below the green line and then we got rejection of these lower prices. Now we have a buy signal here, but we need more confirmation to be sure that we are not entering in an overbought condition. For this purpose, we use RSI. When the red line is closed above the blue line, here in RSI, the RSI line should be above the center line, but not above 70. In other words, it shouldn't be overbought. We want the RSI line to be between center line and 70. So here, the buy signal is confirmed, and in practice, we could enter a long position at this point when the new candle was opened. The stop loss for this trade is placed below the green line, and for the profit target, you can set it in advance at the level that makes risk to reward ratio equals 2, which is actually around here. Or in another method, you can close your position when the red line crosses below the blue line, which happened here, as you can see. Please pay attention that this is exactly the setup that we're looking for. The lines should be separated in this order with an upside angle. If they are jammed and the lines are on each other, we don't take the signal. Let me show you some examples so you better understand. Here you can see that the price again crossed below the green line, and then after that we got crossing of the red line above the blue line. At this point you can see that the red line is closed above the blue line, but as you can see the lines are jammed and very close to each other. When the lines are squeezed horizontally like this, it tells us that the price is moving flat, and it's very risky to take a trade in this situation. So we don't take any trade when the situation is like this. But here in this part you can see that again the price went below the green line, and at this point when this candle is closed, the red line is closed above the blue line and the orange line is also above the green line, and the price is above the major trend line. So you can see that we have them separately in the order that we want and not squeezed horizontally. So in practice we could enter a long position at this point when the new candle was opened with the stop loss below the green line, and we could close our position here when the red line closed below the blue line. Alright, now let me show a short position setup. The first condition is that we want the price to be below the EMA 80, and before that we want lower highs and lower lows. When the price makes lower highs and lower lows, it shows that the market is trending down. This is the structure of a downtrend. So here, as you can see, we are in a situation where we had lower highs and lower lows, and now the price is below the EMA 80. In the next step, we wait for a pullback. We want the price to cross above the green line, and in this situation usually the red line goes above the blue line. After that, we wait for the red line to cross back below the blue line. When this happened, it's a signal that probably the pullback ended and the price is gonna decline more. For more confirmation, we check RSI. For a short position setup, the RSI line should be below the center line, but not below 30. In other words, it should not be oversold. So if RSI line is between center line and 30, which is the case here, the sell signal is confirmed. So in practice, we could enter a short position at this point when the new candle was opened with the stop loss above the green line, and you could close your position when the red line crossed above the blue line, which happened here at this point. As I explained for the long position setup, similarly here, we don't take the signal when the lines are jammed and squeezed in a horizontal situation. For a short position setup, we want the lines to be separate and in a downside angle, exactly like the example that we have here. This trading strategy can be used on any time frame, and you can use it on any asset or market where the prices are moving with the forces of supply and demand. To run this trading strategy profitably in a consistent way, you need to manage your risk properly, because you're not going to win every trade and you will encounter also false signals. And if you don't manage your losing positions in a proper way, your losing positions will be out of control and you will lose your trading account sooner or later. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategies that you can use. I have a complete guide on this. The link is also placed in the description, and make sure you watch it later, because without a proper risk management strategy, you cannot become a consistently profitable trader. All right, now let me teach you the second trading strategy. In this trading strategy, we have 4 exponential moving averages and we have a MACD. So here we click on indicators, and similarly we add a moving average ribbon. We add this one, moving average ribbon, which is a built-in indicator on TradingView platform, and we need to change and adjust the settings. So we go to the settings of the moving average ribbon, and here for the first moving average we set the length at 20, and for the second moving average also the length should be set at 20. For the first moving average, the source of calculation should be based on low, and for the second moving average we set it based on high, and both of them should be simple moving averages, so we don't change anything here. And then for the third moving average we set the length at 5, and for the last moving average we also set the length at 5. For the third moving average based on low, and for this moving average based on high. For these 2 moving averages, they should also be simple moving averages, so we don't change anything here. For the first moving average, we set the color to blue, and for the second moving average, we set the color similarly to blue. And for the third moving average, we set the color to red. And for the fourth moving average, we similarly set the color to red. And finally, we go to the style tab and we try to increase the thickness of the moving average lines so they can be better visible on the price charts. Alright, we're done with the settings of moving averages, and now we need to add MACD. So here we click on indicators and we search MACD. We add this one, moving average convergence divergence, which is a built-in indicator on TradingView platform, and we need to change the settings of MACD so it will be less responsive in the short-term fluctuations in the pullbacks. We go to the settings of MACD to adjust the settings for our trading strategy. First, here in the inputs tab, here for the fast length, we set it at 100. For the slow length, we set it at 200. And here for signal smoothing, we set it at 50. And then here in the style tab, we remove MACD line and signal line because we only need the histogram. Everything is already set on the chart, and let's see how we trade based on this trading strategy. First of all, MACD is going to help us with identifying trend of the market. Very easy. When it is above the center line and green, the market is trending up, and when it is below the center line and red, the market is trending down. And then by the help of these moving averages, we look for trading opportunities that are in the same direction with the current trend of the market. As you can see, the 2 moving averages that are red created a channel that is moving closely to the price action, and the 2 moving averages that are blue, they created a channel that is moving farther away from the price action. So here we have a red red channel and a blue channel. And we're going to use these two channels to find buy sell signals. In times that the two channels overlap, like here in this part, the market is moving flat. In other words, the market is not trending and the price is moving horizontally. But when the two channels are separated, like here in this part, it tells us that the market is trending and it tells us that the price is advancing or declining strongly. When the red channel is above the blue channel, the price is advancing, and in times that the red channel is below the blue channel, the price is declining. As I explained earlier, we use MACD for trend identification, because here the MACD is above the center line and green, so the market is in an uptrend and we should look for long position opportunities. When the red channel completely crosses above the blue channel, which happened here at this point, as you can see that at this point when this candle was closed, the red channel is completely crossed above the blue channel and we don't have any overlap between them. And when we have this situation, this is a buy signal. The buy signal is confirmed only if the bar in MACD histogram is dark green. If it is light green, we don't take the signal because this situation shows that the upside momentum in longer term perspective is weakening. But when it is dark green, it shows that the upside momentum is increasing. So here, when this candle is closed, we have a confirmed buy signal, and in practice we could enter a long position at this point. And for this trade, the stop loss is placed below the blue channel, and for the profit target we set it at the level that makes risk to reward ratio equals 1.5. After this trade, you can see that again we got overlapping of the two channels. Actually, we had separation of the channels here and here, but this is a counter trend movement because the trend is up. So this phase of the market is considered a pullback, and there could be another potential opportunity for opening a long position within this uptrend. Here at this point, when this candle was closed, you can see that the red channel is completely crossed above the blue channel. And when we check MACD histogram, we can see that the bar is dark green. So here the buy signal is confirmed, and in practice we could enter a long position at this point with the stop loss below the blue channel and the profit target at 1.5 risk to reward ratio. Alright, here let me teach you a short position setup. When MACD histogram is below the center line and red, the market is trending down and we should look for short position opportunities. Here, when the reversal was happening, you can see that we had overlap of the blue and red channels, so the market is flat, so there is a potential for a breakout, which actually was the reversal point of the market to a downtrend. And at this point, when this candle is closed, you can see that the red channel is completely crossed below the blue channel, and this is a sell signal, and the sell signal is confirmed only if in MACD histogram the bar is dark red. If it is light red, we don't take the signal because this shows that the downside momentum is weakening. But when the bar is dark red, it shows that the downside momentum is increasing. So here the sell signal is confirmed, and in practice we could enter a short position at this point when the new candle was opened. The stop loss for this trade is placed above the blue channel, and profit target at the level that makes risk to reward ratio equals 1.5. After opening a trade at this point, again you can see that we got overlap of the two channels because the price is moving flat, and so there is a potential for another short position opportunity. Here you can see that when this doji candle is closed, the red channel is completely crossed below the blue channel, and in MACD histogram the bar is dark red. So here the sell signal is confirmed, and we could enter another short position at this point with the stop loss just above the blue channel and profit target at 1.5 risk to reward ratio. Alright, regarding the stop loss, I must also mention an important point here, that sometimes because the momentum is very strong, the blue channel may be far from the entry point. For example, here you can see that when this candle was closed, the red channel completely crossed above the blue channel, and this buy signal is confirmed because in MACD histogram the bar is dark green. So in practice we we would enter a long position at this point. But if we place the stop loss below the blue channel, you can see that it is very far from our trade entry, and it's because of this very strong momentum while the red channel was crossing above the blue channel. In cases like this, you can set your stop loss just below the red channel. But if below the blue channel is not far from our trade entry, that is the best place to set our stop loss. For example, here during this uptrend, at this point, you can see that the red channel completely crossed above the blue channel and the bar in MACD histogram is dark green. So this is a confirmed buy signal, and in practice, we could enter a long position at this point with the stop loss below the blue channel, which is not very far from our trade entry. And this is a very profitable trade, as you can see. Regarding the profit target, you can also close your position when the red channel starts to cross back the blue channel. In other words, when we see overlapping of them. So for example, here we could close our position at this point. This trading strategy can be effectively used in any time frame, but it performs better in time frames like 4 hours or daily, which makes it suitable for swing traders. As with any other trading strategy, risk management plays an important role here, and you need to manage your losing positions properly. The best risk management strategy that you can use is 1% rule that helps you to minimize your risk and protect your trading account from falling significantly. I have a complete guide to this risk management strategy. The link is in the description, and make sure you watch it later. Alright, now let me teach you the third trading strategy. In this trading strategy, we have two MACDs and stochastic oscillator. So here we click on indicators, and since on the free version of TradingView we have limitations for only two indicators, we add this indicator double MACD, this one SK double MACD, which is written by Sir Chris. So now we have two MACDs in one indicator. We just need to give them some special settings and adjustments so they will be suitable for our trading strategy. So we go to the settings of this double MACD, and here in the inputs tab, and here for the first MACD, for the fast length, we set it at 34, and for the slow length, we set it at 144, and for signal smoothing, 9 is okay. And then here for the second MACD, for the fast length, we set it at 13, and for the slow length, we set it at 21, and for signal smoothing, we set it at 9. And then we go to the style tab, and for this MACD, which is the shorter MACD, here we change the appearance to columns. And then for each of the colors here for shorter MACD, we decrease the opacity to 50%. So we will be able to see the longer MACD, which is actually placed at the back of the short MACD. Alright, we're done with the settings of the two MACDs, and now we need to add stochastic oscillator. So here again, we click on indicators and we search stochastic oscillator. We add this one, stochastic, which is a built-in indicator on TradingView platform. And for the stochastic oscillator, we also need to change its settings. So we go to the settings of stochastic oscillator, and here in the inputs tab, for the K% length, we set it at 7, and for K% smoothing, we set it at 3, and for D% smoothing, 3 is okay. Alright, everything is already set on the chart, and let's see how we trade based on this trading strategy. The longer MACD, which is in the back, is used for trend identification, and the shorter MACD, which is actually in the front and changes color between blue and orange, this MACD is used for identifying pullbacks within the trend. And stochastic oscillator is used for identifying trade entries. When the longer MACD, this MACD histogram in the back, is green, it tells us that the market is trending up, so we should look for long position opportunities. And when the shorter MACD goes below the center line and becomes orange, it tells us that probably a pullback is forming on the chart. In the next step, we check stochastic oscillator. We want the K% line, the blue line, to be below 20, and then we wait for the K% line, the blue line, to cross above the D% line, the orange line. When the blue line is already closed above the orange line, the buy signal is confirmed, and we can enter a long position at this point when the new candle is opened. The stop loss for this trade is placed below the previous swing low and profit target at 1.5 risk to reward ratio. While the longer MACD is still green, you can see that the shorter MACD again went below the center line and became orange, but when we check stochastic oscillator, we can see that it is not below 20. So we don't take any action here. Moving on the chart, again, the shorter MACD went below the center line and became orange. And here, the stochastic oscillator in the first attempt, it couldn't go below 20, but here we have it below 20 as you can see. But when it is crossed and closed above the orange line, here you can see that the longer MACD became red. And because of this signal is rejected. We don't take any action in this situation because this is a sign that the trend is probably weakening. And you can clearly see that the market went to a trading range and then it turned to a downtrend. From here, you can see that the MACD histogram, the longer MACD, went below the center line and became red, telling us that the market is trending down and we should look for short position opportunities. In the next step, we wait for the times that the shorter MACD goes above the center line and becomes blue. This situation tells us that probably a pullback is forming on the chart. In the next step, we check stochastic oscillator. In this situation, we want the K% line to be above 80 and then we wait for the K% line to cross below the D% line. When the blue line is closed below the orange line, if the longer MACD is still below the center line and red, the sell signal is confirmed. So in practice, we could enter a short position at this point when the new candle was opened, and you can see that this was a very profitable trade. Please pay attention that in times that the price is in a trading range and there is large swings of the price in the range market, the probability of having false signals increases. So you should also carefully watch the price action to identify when the market is not trending, because MACD is not able to help you on this. The most effective way is price action analysis, but you can also use some indicators like ADX or Andean oscillator for more confirmation. This trading strategy is more suitable for intraday trading, so time frames like 1 hour, 15 minutes, 5 minutes, and 1 minute are suitable for this trading strategy. And please pay attention that risk management is extremely important if you want to run this trading strategy profitably, because this is not a 100% win rate trading strategy. There is no trading strategy with zero false signal. This is not possible, and losing positions are always part of the game, no matter how much accurate is your trading strategy or how much experience you have. So you need to manage your risk properly. 1% rule is the best risk management strategy that you can use, and it's recommended by all professional traders. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy, you cannot become a consistently profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.